202,000 on initial jobless claims. That's a little bit higher, and of course, it's above the psychological barrier of 200,000, but these are still very, very good numbers. The best level, of course, was 187,000 in the rearview mirror. We'll have to see if that gets revised. 1.307 million on continuing claims. That is a new cycle low, I would say post-COVID, but this goes way beyond post-COVID. Once again, this goes into the 1960s. Here we go. Personal income expected up 0.5%. Delivers up 0.5%. Spending supposed to be up 0.5%. A big miss here, up 0.2%. We know inflation and Russian invasion have eaten into the notion of spending. Real personal spending is down 0.4, of course, adjusted for inflation, and that is a big deal. Now, let's get to the Moneyball numbers. The deflators mean you have to take something away to account for inflation. So the personal consumption expenditure deflator month over month was up 0.6 as expected. You have to go back to 2008 to find a bigger one. On the year-over-year deflator, that number is 6.4. That is a new cycle high. That takes you back to 1982. If you look at the core ex-food energy deflator month over month, it came out up 0.4. 0.4 is actually easing back from 0.5, which was the highest since '83. And finally, year-over-year core deflator, 5.4%. Well, 5.4% is definitely easing back just a smidge from what we were expecting at 5.5, but it's still a big number. It follows 5.2, and it's the highest level since 1983. Joe, back to you.
Okay, thanks, Rick. Steve Leisman joins us now with more. Steve, what do you think?
Yeah, I'm just looking at these expenditure numbers. They're still positive. I mean, this is sort of the other side of the coin of what we were talking about earlier this morning, Joe, the idea that the Fed is, not ruling out recession, and yet at the same time saying that the economy is strong enough at this point in order to withstand the rate hikes coming their way. Rick is 100% right. These are still low jobless claims numbers. So this is high-frequency data, the jobless claims number, by the way. And it's telling us we're not seeing a lot of effect in the job market right now from any potential slowdown that might be associated with higher oil prices. And again, these numbers here that you adjust for inflation, people are still spending more. And by the way, Joe, we've been through the roll-off of the child tax credit, which was some of the fiscal restraint that was expected. Yes, inflation is high. It is a burden for consumers to overcome, and obviously a much higher burden for a lot of lower and moderate income Americans. But overall, in aggregate, they seem to be coming, getting over that hurdle and still spending more on an inflation-adjusted basis. I mean, it's good news going into what we're going into, but you can't say we're out of the woods yet.